Hey everybody, Privacy Smurf here from Zenalytics Trading with your Fear and Greed update to keep you one step ahead of the retail market.
This is the sentiment update for the week ending Friday, March 5th, 2024. If you're interested in the larger fluctuations of the market, this week I released a quarterly forecast dealing with the cycles in the crypto market. You'll find the link below in the description. Starting as usual, Bitcoin sentiment is down this week, measuring at 53. There aren't any predictive elements to the chart at this time. Bringing in some speculation, I think it's reasonable to see its support test to the midline. This likely would coincide with a price level around 64,000. If this comes into play, it's possible to see a bounce from that level. Sentiment on the S&P took a big hit this week and broke down from the wedge formation that was forming. It's now measuring at 58. It also set a new lower low. It's very possible a test of the midline is incoming. Bringing in a little speculation, I'd estimate the midline test comes in at a price level around 5160. Bringing in some technical analysis, there are some methodologies around divergence that suggest there are some bearish targets around the 4940 mark. These seem a bit far-fetched at the moment, but this bearish divergence has been building for many weeks. Sentiment on the US dollar index, the DXY, is only down 1 point this week. Bringing in some technical analysis, the 105 level in the price chart is acting as resistance at the moment. It's very possible we see a retracement on the DXY similar to back in February because the technicals intraday and daily look very similar. Something to keep in mind is the DXY is typically an inversely correlated asset to stocks and crypto, meaning they'll move in different directions. But at the moment, intraday and getting close to the daily time frame, they're becoming positively correlated. So intraday will be important to monitor because if the DXY continues down, it may be possible that stocks and crypto assets will also follow the same trend. Sentiment and prices continue the rally this week in gold. Now the sentiment is up to 86. We're well into the greed zone for gold. It's extended up into the high 90s multiple times before retracing. Bringing in some technicals, there's still potentially room to the upside for gold. Bearish divergences between price and momentum have been invalidated, suggesting continuation to the upside. Finally, sentiment on the 30-year bond contract is slightly up this week to 51, despite being down weekend prices. There aren't any predictive elements to the chart. I don't really have a strong conviction in the bullish divergence leading to a reversal at the moment.
Just a reminder, sentiment is great as an indicator, but it's really best utilized with some objective form of technical analysis to generate a signal to act on sentiment readings. If you like this analysis and want to help keep your emotions in check, pop into the Discord. I update sentiment there daily and have a bunch of extra tools and analysis that can elevate your trading game. Link is in the description, and I'll see you next week.